the dollar yen because this is our 800-pound gorilla. Yeah, I guess the mic was too close to my. So as always, the first thing we look at is the weekly chart. Okay, this is the dollar yen, and for the last 3 weeks, we have been having quite a volatile week in the dollar yen, and we did trade below the 91.73, which is on the way up. Let's say the last week. I mean, you can see how volatile last week is or was. It has, as I said, it has been a very tough trading week. Why? Because you had during the week, it came above the 91.73, so that was a buy. And then it came below it, so most of the people either step aside or waited. But as soon as it came back below the 98.88, the 90.88 right there, this here, guys, where we should have taken a short. And that move happened in Friday. And the reason, Janet, also the reason why you should have taken a short is that last week's low was 90.60. Last week's low was 90.60, and our structural point is the 90.88. So at that point in time, you have a break below a structural point of the 90.88 and break below 2 weeks low, which is the 90.60. Then you have to take that short because at least it will allow us to recoup the losses or of what happened during that week. And these, again, this is typical. Again, it's not typical, but nobody likes it. But this is whenever the market is reacting either to a political event. But in this case, we are still going to keep the 90.88 as a buying point. It is still a structural point. And I want you to look at this setup, guys. I want you to look at this setup here. See, the market is coming down, making a momentum low, pushes up, makes a lower low, pushes up, makes a lower low, pushes up, makes a lower low. So far, this is a perfect downward trend. I mean, this is a picture perfect downtrend. Whenever it comes above a prior momentum low, we should get a big reversal or a big short covering, to say the least. So because of the enormous strength that we have in the yen, we are still, this setup, whether we like it or not, this is, the trend is down, but we're still looking for a short-term rally to the upside. Why? Because this setup is the guiding rule, making the first momentum low, coming down, making the second momentum low, and then bouncing back above it, coming above the prior momentum low over here. So that is, and this is where we are. So this is, even though right now, if I'm going to take a trade, I will be short, and I will be shorting the dollar yen, and I'm going short the dollar yen. But the buy is if it gets above 90.88, that would be a buy signal, and that should give me a push. Again, of course, above 91.73 is a second buy. Now, if you look at the daily chart, this is the move that gave us the on Thursday and Friday. That was the big sell-off that took place on Thursday and Friday. But still, if you are looking at this picture, we have a very nice move upward, starting from the low of November 27th. It has moved from November 27th, putting the high on January the 8th. So we had a month and a half of move to the upside. So even though we are having that decline, if it gets above the 90.88, I will definitely be a buyer of that, and that would be an indication of this is the second attempt to change the trend to a possible uptrend. Now, if you look at the intraday, the dollar was moving very nicely. Look at this, the dollar was moving very nicely all of the beginning of next week until that day, until Thursday when Obama came up with the announcement, and this thing just capitulated to the downside. So now if we look at that day, and again, I don't follow, or I don't base our trading decision on the fundamentals of who said that or why did this happen. I really don't care about that. But what we see the event that took place here, and I see this capitulation. So now I'm looking at this chart and I'm trying to identify how I'm going to take the trade. So with this big momentum to the downside, I am still looking for a lower low. I am still looking for a further decline down, and I'm looking for a second. This is such a big push, a big momentum to the downside. We should be getting a further decline. What we had on Friday was a sideways pattern. Yes, we should be still short, and you would stop and reverse. I will tell you 1 second, Elwin, we will put the entry points in a second, but I'm just... So right now we should be short, and I'm looking to go short. Here is the point. On a bigger magnitude, if you guys are trading, we can begin the low of yesterday, the low of Thursday, right here is 90.10. 90.10. So I am looking for a further decline. I am looking, yesterday's low was 89.65. I'm looking for a further decline for tonight to be open and to take it a short. So I'm not going to be taking the first buy, but the good setup, or the setup that is technically would be encouraging for us to actually buy it, is if we get a push down, let's say going to 89.50, going to 89.40, we need a good 30-40 pip to the downside. That 30-40 pip to the downside will make this a perfect and a correct, or a structurally perfect trend. And if it reverses, then I can start buying above the 90.10. So if it does trade below 89, trades below this low of the day of Friday of 89.65, then our first buying point is going to be the 80, will be the 90.10. But if it does not make a lower low, if it holds here, then for us to buy, we need a structural failure. So we're looking for two conditions here to happen this evening when Tokyo opens. Either I get a break to the downside. If it does take a break to the downside and it comes back above 90.10, then I will be a buyer above 90. But the condition to buy above 90.10 would be a trade, significant trade below the low of the day. But if it doesn't and it moves sideways and it comes above 90.10 without making initially a prior low, I will not be a buyer. I have to wait for a structural point. And in this case, the structural point is this here. The 90.50, or in this case, we can buy it at our point that we have from the weekly chart, the 90.88. Because only if it gets above the structural point, we will have a trend change. Anywhere over here is going to be a whipsaw or a sideways move that's not going to be pushing higher. So with that, I'm going to put these numbers in the radar screen. So my buying point, I'm going to leave it as the 90.88 Alvin. Okay? But as I said, if it breaks below the 89.65 and it trades below that, you can start buying it above the 90.10. Okay? The structural point on the daily chart is the 91.73 is still intact. Sorry, the short point is the 89.65. This is the 91.73. Let me see the structure point is downside. The structural points to the downside is too far away. I mean, this is actually the 87.91. This is the next structural point. So I'll put it in just in case, so that for you to see the 87.10. Okay, so the reason I'm saying this, Alwyn, is that we don't want to be getting the first move down or be suckered into a trade to the downside or buying too prematurely unless the market gives me a clear setup. Again, we're taking these signals for the week, so if we leave 10, 20 pips on the table, but we have the confirmation that it's going our way, we will save ourselves a lot of anguish. All right?